My name is Andrew Serafini. I'm the senator from District 2, which is Washington County. This year I'll be introducing 3 different tax packages specifically, as well as some other smaller adjustment ones that all deal with taxes. It's clear that the governor has set the budget straight, but we are talking about moderate and measured measures to really say to the taxpayers of this state, it's time that we give back to you. You've made the sacrifice to help us through difficult financial times. And so we have, the first one is the marriage penalty. We have seen in statistics the best thing to bring a lot of people out of economic despair is actually marriage. It's not about any other philosophical ones, although I would agree with those. It's simply to say a family coming together is really good economically. So the penalty currently is that you don't get the same tax rates, the same adjustments if you're married as you would as single. We'd think it should just be double. The single rate is pretty simple. 2 people coming together should get double the exemptions and breaks that a person would as single, and therefore that's all that bill will do. Second one is a general reduction across the board. Now we're talking about the personal income tax, but there's an advantage to that because it addresses families, the working families, and it does help small businesses. Most small businesses actually pay their taxes not through the corporate tax, but through the individual tax. So this is a simple way to start a reduction. It would be across the board, a reduction for all Marylanders. It's a small amount each year over the next 4 years, trying to get to a 10% reduction in their taxes. We think that's moderate, we think it's measured, and we think it's prudent. Last, I have a bill that would go to a flat tax. Maryland for years and years had a flat tax. It's very simple. What do you earn? And then a flat tax amount. We could exempt all people with incomes under $30,000. So those folks would pay no tax whatsoever. All other Marylanders would pay 3.9%. That's a lower rate than everybody is paying. So if you're under $30,000, it's 0. That's certainly lower than you're paying now. And if you're over $30,000, you'd be at 3.9%. Very simple. It's a broadening of the tax base, it's a simplification. Now this bill has a unique feature to it, that if the state's revenues attain certain amounts, if we grow our revenues, and that's what we're trying to do, grow incomes for everyone, as those revenues grow, then that tax rate will reduce. The original 3.9 is revenue neutral. It brings in exactly the same amount that we need. It is neither a cut or a tax raise. But as we achieve certain revenues, then this triggering event would say taxes will go down as the state does better. Once again, we're not taking any more money out until we achieve certain revenue and income growth. Once again, that's the incentive for the government to continue to cut and live more efficiently, and then it says, let's recognize the citizens of the state. I hope that I will have support from my colleagues. I believe it is the right things to do for the citizens of this state.